So, and we have both of us have a really strong testimony that the Lord is in the details of our lives, and that He moves things around and moves us to different places and puts different people in our lives to help us in our lives. And we have seen that happen so many times. And so we believe that this is why one of the reasons we're here. Heavenly Father's putting us in here.
Okay, let's talk about what we're going to do today. Today we're talking about your tax plan. Everyone here has to fill out either a 1040 or a 1040 NR. NR stands for non-residents. International students, you not only have to fill out a 1040 NR, you have to fill out an 8843, Form 8843. And then everyone has to, well, if you earn money here, you also have to fill out the Hawaii form. And for the non-resident, that's an N15. So today what we're going to do is we're going to give you instructions on how to do it.
How to fill out your tax template. And your tax template will be due next week.
Realize that as an international student, you have to pay U.S. taxes. I know that doesn't sound like much fun, but it's true. So,
but only if you earn money.
Actually, you're right. You only if you earn money.
Right.
But even if you don't earn money, you still have to fill out the Form 8843.
But you don't have to pay taxes unless you.
That's correct. So you're going to have to fill out the federal Form 1040 NR and the Hawaii State Form N15. So, what's your vision? Realize when it comes to your vision on these things, it doesn't have to be long. My vision is I want to pay every penny I owe and not a penny more. You know what? Every dollar I save from not paying taxes is a dollar more I can use on my personal goals, personal and family goals. So it doesn't have to be a lot. What are your goals? What did you pay last year? What tax forms did you use? Again, if you're an international student, the tax form you used was the 1040 NR and the Hawaii Form N15. If you're a U.S. student, it's probably the tax form 1040. And then I'm not sure the Hawaii one. Well, at least in us, we didn't earn any money in Hawaii, so we don't have to pay Hawaii, but we pay Utah taxes. And actually, we pay California taxes, too, for another one. Action plan for your plan is your plans and strategies you will use. We don't go in a lot of detail, but I encourage you to go into the skills development. It will give you some ideas and things. Hopefully, for the U.S. students, you're going to think about putting more of your money, your retirement money, into Roth vehicles. The nice thing about that is that allows you pay taxes on it now, but when you pull it out of retirement, there's no taxes at all. So different strategies. What strategies? Do you have any strategies before and after retirement? Our strategy was to save 20% of every dollar we made after college. And what are the constraints, individual and cultural roadblocks to your plans? If you're a U.S. student and you make any money, I think it's over $400, you have to pay taxes. How about international students? Yeah. So international students not only have to pay taxes in your country, but you have to pay taxes here in the U.S. So this is from BYU International Student Services. If you're in the U.S., going to school during any part of 2024, you've got to file a Form 8843. Then if you earned any money at all in the U.S. and Hawaii, you've got to file Federal Form 1040 NR for non-resident and Hawaii Form N15, which is also for non-resident.
So there's two forms. You fill one out for federal and one out for the state.
So how do you do that if you're an international student? So you go to sprinttax.com, and in January, International Student Services sent you an email. Here's what it looks like. Here's the email from last year. It looks something like this. Sprint tax information and federal tax filing code. So, and what it does, notice you'll have a code here. So what you'll be doing is wait. We encourage you, international students, wait till March 15th, because then the school sends out a 1042S, which talks about scholarship. So once you get that, then you'll go to sprinttax.com. You want to make sure that you have your W-2 forms. You want to make sure you have your form from the church that says how much tithes and offerings you paid. And then you're going to fill that out. And then at the end, when you want to review it, it's going to ask for your code. And if you give them that BYU code, then you don't have to, your federal tax form doesn't cost you anything. So once you do that, and then you print off an extra copy, you can also have Sprint Tax do your state tax form, but it costs you $50. Or you can do it yourself, and we've given you some information there. Sister Sudwicks and I wrote up just a 5-page document to kind of help you do that. You can see that at the front of at the front of this PowerPoint too. So what about if you're a U.S. resident and you're married to a non-resident spouse? What are your options there? So you've got different options. You can file jointly. You can file separately. You can file head of household. But whatever you file, if your spouse doesn't have a Social Security number, they need to apply for an individual taxpayer.
So if you're married to someone who's not a resident of the U.S., they can fill out U.S. taxes and they don't have to do the NR.
Right. Okay. So if they do filing jointly.
But if they file separately, then they have to fill out the NR.
Right. So you would use the Form 1040 and your spouse would file 1040 NR.
Okay. But if they file jointly, they only file out one.
One return, that's right. This is not being...
Okay, I can push it.
So why should we plan for taxes? Okay, Troy, why do you want to plan for taxes? So I don't go into debt. That's a good thing.
Yeah, because we know some people who forgot to pay their taxes or didn't withhold enough money from their earnings, and they wound up having to
pay a significant amount.
Pay a lot, like over a few years.
Yeah, so it's really important that we pay taxes. Is there any area of your life that taxes don't impact? You can go ahead. Think about it. Is there any area that is not impacted by taxes? How about if you die? Does taxes
still pay
imply?
tax.
Yeah, there's a thing called inheritance taxes you pass on. How about investing? Do you have to pay taxes on investing? I couldn't think of a single area that taxes did not have an impact. Can you think of an area?
I was going to say tithing.
Tithing, but you know what? You get a tax benefit.
That affects your taxes because you get less taxes if you pay your tithing.
So if you itemize, you can deduct your tithing. For international students, you can automatically deduct that. So that reduces your taxes.
So I couldn't. A good thing.
Go ahead.
Go ahead.
No, I couldn't come up with an area. So the bottom line is the less you pay the government, the more you have for your personal and financial goals. And we pay every penny we owe and not a penny more. So principles of effective tax management, sweetheart.
Know your goals and vision and values. Seek and receive and act on the Spirit's guidance. Understand the tax system of your country so you can pay everything you owe and not a penny more, and keep good records for taxes and for other purposes, and get good help when you need it. Like we just purchased the TurboTax because that's what we use now to do our taxes. We used to hire an accountant to do our taxes, but it got too expensive, and we're like, we can do it ourselves.
Well, actually, our taxes became a lot more simplified.
That's true. So we decided to start doing them ourselves.
And for international students, you can actually go to the International Student Services, and then also Sprint Tax has a lot of videos and things like this.
And also, Sprint Tax will do your federal tax for free, and they will charge you $50 to do your state taxes, but you could probably learn and do your state taxes by yourself.
That's possible, okay.
Yeah.
And we give you some, on that handout, we give you the website to do it yourself.
Mm-hmm. So we need to think celestial, trying to live worthy of the Spirit, who's learning important information about the tax system in my country so I can act with integrity and minimize my tax payments, wisely keeping records of my income and expenses, and getting good help when needed so that I can have the resources that I need to accomplish my personal mission, family vision, and goals.
Okay. 4 different types of taxes. You might think that there's just one type. It's all expensive, but 4 different types of taxes. We'll start first with income taxes. And income taxes, in the US, it's called progressive. So you pay taxes on any income you earned. In the US,
when it talks about progressive, progressive means that the more you make, the more you pay.
Yeah.
So basically, so you pay a certain amount for the first little bit that you make, and anyway, it'll talk about that.
Yeah. So in the US, you have to pay both federal and state tax. Unless Alaska, Christy, you know, in Alaska, they actually pay you to live there. Or in certain states like Texas and Nevada, there is no state income tax.
State tax.
State tax.
But there's always federal taxes.
Yeah, always federal taxes.
Can't get out of
local income taxes are uncommon, but some cities like New York City, San Francisco, that you actually have local income taxes too. So be aware.
So I said city
the taxes, they get you coming and going. Okay, capital gains taxes. This is really taxes on your investments. So if you have an asset, whether it's a car or a house or a mutual fund or a stock, what you paid for it is one cost, but what you sell it for is a different cost. So the difference between what you sold it for and what you paid for it is called the capital gain. If you lose money on it, it's a capital loss. But there's taxes on those capital gains. And realize the government is trying to encourage you to invest longer term. So short-term capital gains are capital gains that you've owned the asset for 365 days or less.
So if you buy and sell stocks a lot, you're going to pay a lot of capital gains.
Right.
If you made money.
Right. And if you've held it for 366 days or more, it's long-term capital gains, and it's taxed at a lower or preferential rate. Okay. And then there's income-based taxes. A lot of you guys are familiar with Social Security tax, FICA, things like that. So.
But they don't take those taxes out for the iWork students.
No, they don't.
Because they will not be able to have the benefit of that.
Yeah.
So they don't pay those taxes.
But for all the US students,
people do.
When you work, you have to pay half of this 15.3%. So you pay 6.2% for Social Security, 1.45% for Medicare, and you're only responsible for half.
So your employer pays the other half. Whoever you're working for pays the other half of your FICA taxes, unless you're employed by yourself and then you pay the full amount.
Yeah. Okay.
Okay.
And then there's even more taxes, non-income taxes. You guys realize every gallon of gas you buy, there's almost $2 of taxes in it.
They tax you on that. And
Gas.
then also tobacco and alcohol are taxed higher because they want you to not do it. Okay. So they tax you on it. And real estate, it's property taxes, gift and estate taxes.
So when you die, when your assets are transferred to your kids, if it's over a certain amount, there's estate taxes there too. So taxes get you coming and going. So let's talk a little bit about how you calculate it, because it's similar for both U.S. and non-residents. Number one, determine your total income. In the U.S., it's basically income from all sources, less any exclusions.
And we'll talk about those.
Non-residents, it's determine your economically connected income. How do your economically connected income that you created here in the U.S. Then what you do is you calculate your adjusted gross income. So both U.S. and non-residents subtract adjustments to your gross income to get your adjusted gross income.
And we'll talk about the adjustments, what they can be.
3, you calculate your taxable income. The U.S. you can either use a standardized deduction or an itemized deduction. The U.S. gives you certain benefits. So actually what you want to do is you want to calculate it both ways, and whichever one you pay the less tax, that's what you want to do. So
the standardized deduction is a flat thing that they let everybody deduct, like $30,000.
Yeah, in 2025 it's $30,000.
So
and about 3 years ago they doubled it, but it used to be about $12,000 or $11,000. But now about 80% of the
But the itemized deduction is where you keep track of all of your expenses and then you use that instead of the 30,000.
Yeah.
So if your itemized are greater than 30,000, then you should use the itemized.
Yeah.
But you have to keep good records in order to use the itemized.
Yeah. And we'll talk about that in a little bit. And then you determine your tax liability. Both, you look up what was your taxable income, you look it up in the tax table, and that gives you your tentative tax. And then what you need to do is you figure out what is your tax liability after credits. Credits are different than deductions. Credits are dollar for dollar reductions.
And we'll talk about those.
One of my favorite ones was the child tax credit, which is $2,000.
So when
we had seven kids, we hardly paid any federal tax at all.
Yeah, it was kind of nice.
So you had one child born on December 29th. We call that good tax planning. Okay. So let's...
Okay, and then we calculate your taxes too.
Oh yeah, calculate your taxes, do a refund.